So you got yourself a DexFi bond. That's awesome. But you've probably noticed something. Its price isn't set in stone. It goes up, it goes down. So what's the deal? In this explainer, we're going to pull back the curtain and break down exactly how its value is calculated. No confusing jargon, just the straight facts.
Right. This is the million-dollar question, isn't it? You're holding this bond NFT in your wallet. You know it's your slice of a bigger pie, but what is that slice actually worth at any given moment? Well, it turns out the answer is way simpler than you might think.
To make this whole thing click, we're actually going to step away from crypto for a minute. Yeah, you heard me. We're going to use a super simple, everyday idea that'll make this whole concept crystal clear.
Okay, imagine this. You and a bunch of your friends decide to start an epic pizza fund. Everybody throws some cash into a big pot. In exchange for your cash, you each get a ticket. That ticket is your proof that you own a piece of that pizza fund. See where I'm going with this? Your DexFi Bond NFT? It's basically your ticket to the fund.
So, you've got this ticket. How do you figure out what it's worth? It all boils down to a really straightforward formula. It's all about how much money is in the pot and how many tickets are floating around.
And there it is. Now I know, that formula might look a little intense at first glance, but the idea behind it is super simple. The price of one bond is just the total value of everything in the fund, minus any profits they've set aside, divided by the total number of bonds out there. For our pizza story, just think of it like this. It's all the money in the pizza pot, divided by the number of tickets everyone is holding. Simple as that.
Let's just walk through it real quick. Step 1, you count up every single dollar in that pizza pot. That's your total fund value. Step 2, you take that big number and you divide it by how many tickets exist. And boom. Step 3, that's the price for a single ticket. This is the exact same logic that sets the price for your bond NFT.
Okay, now for the fun part. What happens when things are going great? What if your little pizza fund suddenly becomes way more valuable? This is where you get to see your investment really shine. Let's say your fund gets a little smarter, right? It finds this amazing 2-for-1 pizza coupon. All of a sudden, the money in your pot can buy twice as much pizza. The value of your fund just shot up. In the crypto world, this is just like when the assets in the treasury, like the Ethereum it's holding, go up in price. The whole fund is worth more.
Let's put some numbers on this to make it real. Imagine the fund started with $1 million, but the crypto inside did really well, and now the total value has grown to $1.2 million. Nice!
So what does that do to the price of your ticket? Well, if there are still 1,000 bonds or tickets out there, we just do the math. $1.2 million divided by 1,000 bonds, that gives you a new price of $1,200 per bond. Just like that, your investment is worth more. That's the power of the market going up.
All right, but we've got to be honest here. We have to look at the other side of the coin, because investing isn't always a straight line up. What happens if the pizza fund takes a hit?
Now, picture this. The pizza place suddenly jacks up its prices. Your money doesn't go as far anymore. The same amount of cash in your pot now buys less pizza. The value of your fund is shrunk. And that's the perfect analogy for when the crypto assets in the DexFi treasury go down in price. It happens. That's just the nature of the market.
So in this case, maybe a market downturn causes the fund's value to drop from that original $1 million all the way down to $800,000.
And the result? Well, it's pretty much what you'd expect. With the fund's value now at $800,000 and the same 1,000 bonds in play, the new price for each bond is $800. So here's the key. Your bond's value is directly tied to how the assets in the fund are performing. It can go down just as easily as it can go up.
Okay, pizza is great, and I'm getting hungry. But let's bring this all back to the real world of DexFi. It's time to connect the dots from our simple analogy straight back to the crypto concepts.
Get ready, because this is the big aha moment. That pizza fund we talked about? That's the DexFi Treasury Fund. The money in the pot? That's the crypto, like ETH. Your special ticket? That's your bond NFT, of course. And the price of that ticket? You guessed it, that's the price of your bond NFT. It's a perfect one-to-one match.
So let's just boil this all down. What's the number one thing to remember? Your bond isn't like money in a savings account. Think of it as a share in an investment fund. Its price floats because it's a direct reflection of the real-time value of all the crypto inside that fund. So when the crypto market has a great day, you do too. When it dips, your bond's value is going to dip with it. You're right there in the market, riding the waves. So, let's say things have gone great. The market's up, your bond's value is shot through the roof, and you're feeling good. That's amazing. But it leads to a really important question. What's next?
How do you actually, cash in on those gains? Well, that is a fantastic question, and it's exactly what we're going to cover in our very next explainer. You won't want to miss it.